Okay, in this video, we're going to talk about subsidy reconciliation, or the advanced premium tax credit when you're getting a plan on the marketplace or through the state exchange. So there's a lot of questions that come up, and one thing I'll say right off the bat is I am not an accountant, and I am not the IRS, and I am not the guy making the rules. But what I can tell you from what I've seen happen over the years, a lot of times people have questions about, do I have to pay my subsidy back if this happens? Well, what if this happens? Well, what if I end up filing separately, getting divorced, getting married? How does all that work? So in this video, I'm just going to touch on one specific case, which is there is a chart, a repayment chart based on what your income ends up being. There's only certain limits to what you have to pay back, depending if your income falls under a certain amount. So let's look at what those are specifically. So somebody overestimates their income. So what happens there, this is the chart that comes right from the IRS website for the repayment limits. So let's say somebody puts down that they are married and they get a tax credit. So let's say it's January 1st, 2021, you say you're married, you're going to file jointly, you both get a subsidy. Or maybe you're married, you say you're married, you're going to file jointly, you use one person's income, only one person's on the plan, and let's say the subsidy you get is $1,000 a month. Well, that one person's income, let's say, is $20,000, and the spouse's income is $80,000. But the spouse with the income that's $20,000 is the one on the plan, and there's the one that is getting the tax credit. So what happens at tax time? So if they actually end up filing separately, this repayment chart, let's go to the IRS website here. This repayment chart is what they'd have to pay back if their income ends up falling under these numbers. So less than 200% of the FPL, or federal poverty level. What is that? So for one person, that would be like if you're less than 25,700, just ballpark. So if that's the case, you'd have to pay back $325 on your tax return. If you're between 200 and 300%, if I'm looking at the chart here, is about 32,200 for one person. So you'd pay back $800, and then somebody that is below 400%, you're going to pay back $1,350. So 400% for one person is about $51,000. What does that mean? So if you're making over 400% and you underestimate your income, you're going to pay all the credit back. And then if you fall within these parameters, these are the repayment limits. What happens a lot is sometimes, if people are going through a separation, they think that, I put down that I'm married and we're going to file jointly, but that didn't end up being the case. I only used my income that was $20,000. My spouse makes $80,000. Am I going to have to pay back all the subsidy if we end up filing separately? And the answer is you don't have to pay back all the subsidy, but you would have to pay back something based on these parameters. So in this case, that person makes 20 grand, they're going to have to pay back $325. This premium tax credit reconciliation is really a crazy thing, but there's a whole lot of special circumstances that come into play. This repayment chart is one of them. But just keep in mind, if you're over the 400%, you're going to pay back all the tax credit if you underestimated your income. Well, when I say all the tax credit, if you end up underestimating your income to the point where you would have qualified for no subsidy at all, okay? Because, if you say 20 grand, you end up making 60 grand or 70 grand, depending on what state you're in, there still may be some tax credit. Again, this was just this specific repayment chart. This comes right off the IRS website for the 2021 tax year. So that is what we had for you today. Now, if you guys could do us a favor, just go onto our channel, hit that subscribe button, hit the like button. That also will help other people see this information, and it helps us out too. Thanks.